I'm always telling you that a stock like Apple should be owned, not traded. But sometimes that own Apple strategy can be very difficult. And it's hard to remember a more challenging period than what we saw last week, when the company reported what was widely viewed as a just okay quarter and then gave you bad guidance. That was on Tuesday. Then Thursday afternoon, big-name investor Carl Icahn came on CNBC, told Scott Wapner that he was dumping his entire position. Nevertheless, we need to remember that every time people have written off Apple in the last 15 years, it's been a bad mistake. That's why I'm thrilled to welcome Apple CEO Tim Cook to talk about the future of this great American company. Mr. Cook, welcome back to Mad Money.
Thank you for inviting me. It's great to be here.
All right, Tim, there's a curious, really strange disconnect between what I read and hear on Wall Street about Apple and this. Because if you, it's going to be an impossibility to pry this from me. Cold, dead hand time. You can't. And yet when I read the stories, it seems like people think it's over. How could it be that you can't have this ever, or the ecosystem, but it's dead?
Yeah, I think that's a huge overreaction. Look, we just had actually an incredible quarter by absolute standards. You know, 50 billion plus in revenues and 10 billion in profits. To put that in perspective, the 10 billion is more than any other company makes, and so it was pretty good quarter, but not up to the street's expectations. Clearly. What we're seeing is that people are upgrading at a different rate, a lower rate than they did last year, but still higher than the year before. And so we had this abnormally high upgrade rate last year as people bought into the iPhone 6. And now we're comparing to that along with the other things going on that many companies are facing with currency rates and macroeconomics, et cetera. But the most important thing is that customers love our products, and they're using them, and the satisfaction's never been higher, the loyalty rates have never been higher, and that is what is really important for us. That's the most important thing for the long term of Apple.
All right, well, let's talk about the shorter term that's captivated the narrative. Tony Sacconaghi, good analyst, on your call all the time, tells the New York Times, there's no question that Apple's best days are behind it. The company grew at astronomical rates, and it's now so big that its inability to grow at these rates doesn't exist anymore. There's an obituary.
Yeah, I couldn't disagree more.
Okay.
Well, here's what I see. We're in some incredible markets. The smartphone market, eventually everyone in the world will have a smartphone. Penetration today is in the 40s. Long way to go. Emerging markets like India, the LTE penetration is 0. We've got great innovation in the pipeline from new iPhones that will incent you and other people that have iPhones today to upgrade to new iPhones.
I will need something else because I don't think,
need something
but
else.
I can't think of anything else that I need.
But we're going to give you things that you can't live without, that you just don't know that you need today.
Okay. That's what I want.
And that has always been the objective of Apple, is to do things that really enrich people's lives, that you look back on and you wonder, how did I live without this?
Now, why is the story not talked about nearly as much, that this is also a service? That it's become, it's viewed as a device. You're a hardware company, 60% hardware, can't grow to the sky, it's done, versus what we know, which is that other than, say, the Netflix bill, maybe the Amazon bill, you can put things on this, whether it be my music, I've got the family plan, whether it be because I've got a lot of pictures and I do the iCloud backup, the Apple Pay. Why do people not talk about the fact that this is not a dead device?
Yeah.
It's something that we belong to.
I think in fairness, we didn't talk about it a lot until recently, and so I take that. But as you say, services now is the second largest revenue segment at Apple. It was for last quarter. It was for the first half of the year as far as that goes. And so last quarter, we were at $6 billion, up 20%. It's a fast growing. And you look at what it is. It's things like the App Store. You go and you buy apps far after the sale. You might subscribe to Apple Music. You might use Apple Pay. You might buy songs. You might rent movies. And so it's all of these things. And it really adds up.
Now,
and that, of course, is based on how many people are using our devices, how many devices out there. And there's over 1 billion devices in use. This is huge.
See, because exactly, I figure when it gets to 1.5 billion, there's a number where we'll be thinking of the average use each month and the average pay to you. It's not there yet. In the interim, what defines the story would be that China's fallen off. That China, which you said in the previous quarter was going pretty good, but the beginning of this last month of the last quarter was not that good, has now become clouded out everything else. Right, wrong, should be, shouldn't. You've talked endlessly about China, middle classification. What's happening there, and how did it happen so fast that many didn't see it coming?
Well, here's what we see going on in China in the short term. In the short term, the iPhone upgrade rate affects all countries, including China. The great thing is the switcher rate in China is huge, 40% up over the first half of last year, the first half of this year. This is huge. So these are people switching from Android smartphones to iPhone in China. Economy, clearly not as strong as it was a year ago, softening. Currency, weakening. And so you've got a confluence of items in there, some that are Apple specific, like the upgrade thing that we talked about, some things that are more general that affect everyone. However, here's the way I look at it.
Okay.
2 years ago, we had enormous sales. And so last year we did even better, 80% better. So we grew 80% over the previous year. This year, in constant currency in mainland China, we were down 7%. So if you look at it on a 2-year basis, Apple grew 70% in China. It's hard-pressed to say those aren't good results.
Okay, I want to stay on China for a second because the first leg down in the stock last week was because your guidance. Second leg down was a man, Carl Icahn, who had been closely affiliated, talking about a no-brainer Apple, who says, look, China's an issue. Now, he sold before we knew anything about the China State Administration of Press, Publication, Radio, Film, and Television blocking Apple iBooks and iTunes movies, but was concerned, at least ostensibly, about China. So then, I look at the different components of China. Yes, upgrade, but how about white box? How about the fact that there is an encroachment issue at the lower end? And is that something that could have slowed Apple's sales down?
No, I think what you see in China in general is the smartphone industry isn't growing.
Okay.
There's movement between different suppliers of smartphone. But I think in the areas that we play, we're doing quite well. And in the last month, I'm thrilled at what we've seen with the iPhone SE launch that's been there. This is the phone that we just shipped that packages a whole bunch of our technology from iPhone 6S into the 4-inch form factor. And so that looks very strong. In terms of the books and movies, what you're talking about is that we did offer books and movies. Currently, we're offline. And what I can tell you there is we're working with the relevant government agencies and other businesses. And we're pretty confident and optimistic that we'll be back online and offering those to our Chinese customers soon.
Okay, so the idea that perhaps a large hedge fund investor wants out is quite different from the notion of if someone just bought it and owned it rather than looking at their quarter to quarter, probably a better way to look at Apple over the long term.
Yeah, I think from a long-term point of view, let's go back to China for a minute, because I think this is important. Here's what I see in China, or we see in China, is the middle class there is booming. And so you look back just 5 years ago, there were about 50 million people in the Chinese middle class. 5 years from now, that number is going to be almost 500 million. I mean, this is an unprecedented growth of the middle class.
But you left that out this quarter. On the conference call, I parsed every word of your last few conference calls. You did not talk about middle classification, which then made us feel that something was wrong.
No, then it was my error for not talking about it. I could not be more optimistic about China. I think the long-term thesis is intact. There has never been anything like it in the history of the world. And I'm still as optimistic as I've ever been.
India, obviously, brand new iteration. Finally, LTE, what people at home should know. Finally, a system that can use your great phones.
Yeah.
Inning one, inning half. Lots of people.
Let's talk about this. This is another huge one.
Okay.
India will be the most populous country in the world in 2022. India today has about 50% of their population at 25 years of age or younger. It's a very young country. People really want smartphones there, really want smartphones. And this year, the first year, LTE begins to roll out. And so many of your viewers here in the United States, they're used to using LTE and streaming video. And hopefully they're getting a good experience there. In India, you can't do that. There is no LTE. And so that's changing, huge market potential.
I want to talk about the stock a little bit. It is mad money. Huge buyback. A lot of people saying, well, wait, they keep buying back 1/5 of the company. But what has it done? Your stock is down below where you bought the average amount, much higher price. Is it a waste versus innovation, or is it not really a trade-off?
It's not a trade-off, is the answer to that. We first look at all the money that we need to invest in the company, in R&D, in stores, in the supply chain, all of the areas we need to do, including M&A.
Okay.
And we take the money that's left over, if we have some, and we do at this point, and we give it back to our shareholders. And we do that in terms of dividends and buybacks. And so if you look at dividends, we just raised it for the every year since the beginning. We raised it to 57 cents this time, and we're very happy to give that to our shareholders. And on the buyback side, I didn't see how the stock performed today, but we were still below. The last time I looked, we were still below the average that we paid. And we tend to be opportunistic in buying it. And so we don't have some regimented program that, is X shares a day or whatever.
But if you talk about macro headwinds, dominant on the theme, on the conference call, difficult compares, dominant, currency, no new iteration yet, why not wait? What's the urgency? If you're going to be opportunistic, wouldn't that say, let all the negativity come out, let all these hedge funds blow it out, and then we'll make a statement?
Well, opportunistic to me means you buy it when you think the company's undervalued, and we believe the company's undervalued.
Fair enough. And, now, how do you know? Let's talk about the mindset, because the mindset's not based on, they're not lunatics who make up these things. They don't believe best day ahead. They believe that the pause in growth is not a pause. But they're looking at Microsoft under Bill Gates and then goes to Steve Ballmer. They're looking at Hewlett and Packard and thinking, well, whatever happened to that? They're looking at Andy Grove, Gordon Moore, and they're thinking Intel. And they're saying, well, these guys were all fabulous. And then the next thing you know, I mean, they're selling at 9 times earnings like Tim Cook. And so when you're down at 9 times earnings, what that says is it's over.
Let's back up for a minute.
Okay.
Let's take a step back and let's look at how did we do in this quarter or the first half or whatever. And what you would find is 50 billion and 10 billion in profit. No one else is earning anywhere near this. Last year, we earned 53 billion in profits, and I think the number 2 company was 24. And so we're doing pretty good. And by the way,
but that's important.
We did what we said we would do. We said the revenues would be between 50 and 53. We came in at 50.6. We said margins would be 39 to 39.5. We came in at 39.4. But the real answer to your question is that the thing that is different is that customers love Apple products.
Customers didn't like any of those companies.
And the relationship with Apple doesn't stop when you buy an iPhone. It continues. You might buy apps across the App Store. You might subscribe to Apple Music. You might use iCloud to buy additional storage. You might buy songs. You might rent movies. And so there's a significant number of things. You might use Apple Pay every day now, or at least several times a week. And so that relationship continues. And because our customer loyalty is so high, the likelihood that somebody upgrades to another Apple iPhone in this particular case is really great.
Okay, so let's talk about innovation and that revenue stream. You've said over and over again, can't buy innovation because that's in your DNA. Why bother to buy someone else's, which won't be as good? But at the same time, you have this service stream you just mentioned. You said that you want to do M&A, even bigger deals, where you are most excited. I listened to you today, right here. It seems like you're most excited about services. Is that where M&A can come? Because why not put it through this new 1.5 potential device channel?
Could it come in services? Yes, and we've bought some companies to help us in services. But it can also come in a number of other areas. We're fairly acquisitive.
Right.
We haven't acquired a very large company yet, but we've acquired a lot of companies. We generally acquire a company every 3 to 4 weeks on average. And so it's a rare month that there's not a company being bought. We typically buy for technology and really great people.
Right.
And but you know, we'll see. We're always looking.
Now, when we talk about innovation, again, I don't want to beat the dead horse, but you know the rap. The rap is they're not innovating, and yet we find ourselves wanting to buy the new iteration. I mean, you are a surprise company. It would be ridiculous for you to talk about what's going to be in the 7 because it's a statement and it's also a play. It's a drama. There's drama at Apple. There's no drama to Wintel. I mean, there was never any drama to Hewlett-Packard. How important is drama to you? Because I also have to know that you're a thoughtful guy who likes literature, likes movies, likes TV, and you like an arc.
Yeah, we don't talk about futures as a company. As you say, we're fairly secretive. We don't talk about products that are in the roadmap. But I would tell you that we're incredibly excited about things we're working on. Okay. Incredibly excited. And so I don't want to be more specific than that, but I think that the other thing maybe that's worth pointing out is if you kind of look at all the things Apple has done over time, at the time they were done, they were rarely ever seen like they were in retrospect.
Well, this bust, you're talking about the bust of the phone, of the watch?
I think the watch would be like that too, because if you look at iPod wasn't viewed as a success, but today it's viewed as an overnight success.
Right.
The iPhone was the same way. People were writing about there's no physical keyboard. Obviously, nobody would want it. And so I think that in a few years, we will look back and people will say, how could I have ever thought about not wearing this watch? Because it's doing so much for you. And then it will all of a sudden be an overnight success.
But then I went to the second letter that Icon sent you about doing a buy. By the way, that was in the mid-120s. It was obviously, in retrospect, a trader, I think, saying this is the time to buy. But he talked about 20 million watches and then 40 million watches. When we see these things in fiscal year 2016, we see these things, we say, how did they get them? I just want to be making clear, it is not your guidance. You never talked about numbers like 20 and 40 million, right?
Never.
That is just other people running with the ball. And why do they run with it when you say, listen, we're not making any projections like that?
I don't know. The way that we look at the watch, though, our first goal is to establish a new category.
Okay.
Smartwatch category wasn't really established. So we needed to establish the category, and we wanted to roll out slowly. Well, today, to put it in perspective, you can buy Apple Watch in 14,000 locations. You can buy the iPhone in over 200,000. And so we're still in learning mode. We're learning fairly quickly, though. We know a lot more than we did a year ago, and you'll see the Apple Watch get better and better.
Okay, just for this last series of questions, I do need to talk about size. There is we can use baseball analogies, we can use football, whatever, but we need to know where you think we are versus this notion of the first question on the conference call. It's about, now you're a value stock, and I'm thinking, you know what, I don't like to think value versus growth. I like to think where we are in a cycle, total addressable market. Where do you think we are, China, India, worldwide, developed, not developed, in terms of the need to have this and the need to upgrade?
Yeah, well, let's talk about smartphone first with iPhone. What I see is that countries like India, no LTE, so 0% penetration. They are selling smartphones, and we sell iPhone there. But arguably, you can't get the full value from it.
And it's mom and pops that you buy it from. It's not a...
Yes, because the retailers are not huge national kind of retailers, and the carriers don't sell phones in India. So there's a lot of work to do. But last quarter, we grew 56% in India on iPhone units. So this is pretty big. Overall, macro, worldwide, smartphone penetration's in the 40s. And that's IDC kind of
Why does Wall Street think 40s is done? Meaning 40s is 40. What point in the conference call, honestly, Tim, I'm looking at all the calls. 40 is 80 to these people. 40% means 80. Because they're looking at developed world, they're saying, well, wait a second, developed world's really much further. No one uses your numbers, by the way, which is really kind of odd because you are the CEO. But I repeatedly get the sense that people say developed's finished and emerging isn't going to be your bailiwick. I don't know why either I just need to refute this.
Yeah, well, here's what I would say to that is, I heard the same thing about China. And our revenues from China were larger than any other foreign company. In Greater China last year, our revenues were 58 billion. And so we do know something about emerging markets. And you know, it turns out that people in every country in the world, there's a segment of buyer that wants the best product and the best experience. And that's what we're about providing. And we did fairly well in China. We've done fairly well. And despite the short-term turbulence here, we're doing fairly well now.
You're saying short-term turbulence, they are upgrade, start again.
Is huge. And now we're really putting energy in India as well.
Right.
And there are other markets in the world where I think that people sitting here in this country look at it through just a lens of what's happening in the United States.
Right.
And but there are a lot of people in the world who don't have the pleasure of owning an iPhone yet. And now the second thing I would point out is the number of switchers switchers are people that were using an Android phone, they switched to an iPhone, largest ever in the last 6 months. So despite overall iPhone sales declining, led by the upgrade that we talked about, switchers hitting new records. In China, switchers were up 40% from the first half of last year to the first half of this year. And so switchers we feel great about. That's really important because what that says is the market doesn't need to be growing hugely for Apple to grow because our share is, relatively speaking, in many markets, low. And if we can get switchers over, we can grow.
Okay. Well, if that's the case, then I want to know whether you think Wall Street, I know you care about it, is dead wrong. Because Wall Street looks at it by the four walls of the spreadsheet. Okay, 922, going to 840, who knows, maybe go back to $9.10. Remember, they're just looking at it, and they're making the judgment that stocks lose their multiple, lose the price earnings multiple, if you can't get the numbers up. And they're saying, you're not giving us any window when you will. You already said this next quarter is not going to be that good. Why should we buy? I mean, in the end, it's a little bit binary to them. Mm-hmm. Why should we buy when we know that stocks that have this trajectory have historically hurt us?
Yeah, I think Wall Street is a collection of people, right? Okay. And so there are many different viewpoints in there, and I'm not sure there is a common one. I mean, that's the beauty of the street is there's a diverse group of thoughts. But in terms of what we think, which is what I can really attest to. We're reasonably good at estimating what we think we're going to do. I'm not saying we've always been right or always will be right, but I think if you look back versus our guidance, we're pretty good with that.
No, we're
really good with it.
Yes, and that's why that's why this quarter there's a misperception that it was a miss. It was exactly what you were looking for. Yeah. And next quarter is down. But I'm just saying. Last question: do I have any confidence that the last quarter of this fiscal year is going to be up?
At the last quarter, I'm not projecting quarter by quarter. Okay. But what I can tell you is backing up and looking at the larger picture, we're in great markets. We have huge opportunities geographically. We've got great innovations in the pipeline. People love our products. They love using our services. All of this, to me, equals great opportunity. Now, your viewers have to decide what they want to do, obviously, but this is how I feel, and that's what I can tell you.
You know, I say, don't trade it, own it. Tim Cook, CEO Apple. Thank you so much, sir.
Great seeing you, Jim.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.